But I don't think this is necessarily the end of this dip, because this dip has only just started. This retrace from pretty much a few days of constant green price action to the upside, well, we need a bit more time. One day isn't enough, most likely isn't enough. So we need to give Bitcoin a bit more time. This was the monthly order block. This is the price action resistance that I was paying attention to. So coupled with the fear and greed index, we know we're in a greedy territory, something to bear in mind and be wary about. And if we have this order block coming up, if we have this monthly resistance area coming up, if we're getting this fear and greed index signal right over here, and this order block is over here, that's two forms of confirmation that you have to bear in mind, that there's a lot of greed in the market, there's a resistance coming. Let's make that quick calculation that, well, there might be a pullback coming. So that's a very good sort of tool to use in your Confluence along with price action analysis. But the thing I'd like to mention before we close is that I'd think about the fear and greed index reaching this range once again. I'd like it to dip into the range and then see where Bitcoin's price is at that point. Hello and welcome back to the Rekt Capital channel. Welcome to today's video. I hope you've had an amazing weekend, a restful, peaceful weekend in the company of family and friends. Welcome to today's video. I hope you enjoyed that little vignette of the video from last Tuesday where I was talking about the Bitcoin dip. Of course, if we go back to last Tuesday, then this is where we saw that dip. Of course, we saw a rejection from the monthly order block, that is this supply zone, and we've seen a rally since then. We saw a small rally to the upside, but essentially this was just bearish confirmation against a very strong trouble area that is 10,300, 400 roughly speaking. So we've seen a rejection since then, and it's been very much the case that there's been a lot of greed in the market. A few days ago, we saw greed levels at around 61 or so. So that's something to bear in mind, because over the past few days where we've been seeing these retraces across, well, a general market retrace in general across altcoins and Bitcoin. So it's very interesting to see that we were at these greedy highs and we continued, we persisted to be at these highs. Bitcoin was relentless in just maintaining those highs, and it was that consolidation at those highs that allowed and enabled those really enjoyable, nice altcoin rallies to the upside. This is, of course, the greed level that I was talking about. This is roughly actually 65 on the fear and greed index, so quite high. We haven't seen these greed levels since around August 19th of 2019. So a long time ago we didn't see these greed levels, so it's really good to just see that rejection, because it's a healthy psychological reset as well as a healthy market retrace for Bitcoin. So just cycling back to that video from last Tuesday, and of course if you'd like to check it out, here it is right in the top right corner. We're seeing a correction in the market sentiment, in the psychology of market participants, and in the price action on different types of charts, whether that's a chart of Bitcoin or whether a chart of different and many altcoins. And this correction is correcting for over exuberance, over optimism in the market, and it's very healthy for that to do so. But looking at this index right over here, what I was talking about in last week's video, in Tuesday's video, is that I'd like this index to return to this neutral level. And as you saw right over here, we are getting that neutrality that the market really needs, but is it enough? Well, we need a little bit more neutrality, and this is what this range essentially means. Market neutrality, no exuberance, no over-optimism, and at the same time, not a lot of fear as well, because we just want the market to just taper off a bit, lose a little bit of interest, and just kind of stabilize. This is what it's all about, stability. So once interest towards the market stabilizes within this range, that's going to be a good thing. And it's going to be an even better thing if we see the fear and greed index return to this green level, where people are going to be fearful about the market. And of course, fear precedes financial opportunity. At this time, it's very difficult to say if we're going to become very fearful on the market. It's very difficult to say if we're going to return to this green area right over here. But for all this time, since last week, since Tuesday, I've wanted the fear and greed index to return to this range, and it looks like it's going to do that. It looks like it's getting closer to the top of the range, and if it sinks into that range, then that's going to be a good sign. And that's where I'm going to look for confluence between the index and Bitcoin's price. But before we dive into Bitcoin's price action in a bit more detail to just describe the price levels that I'm potentially watching for, there's a new webinar date announced, Altcoin Hype Cycles, February 20th, this Thursday, UTC. Pre-order your spot at the webinar. It's going to be an awesome time. In a webinar from a few weeks back, we had a lot of red hot engagement, lots of good questions about the topic, and of course past performance doesn't guarantee future outcomes, but like we've seen, guys, over and over, especially with Bitcoin's price in relation to the Bitcoin halving, history doesn't always repeat itself, but it does like to rhyme. So you're more than welcome to join. $6.99, $7.99, $8.99, $9.99, you get to choose the price. This is the pre-order discount of $6.99. The pre-order discount link is in the description down below, as well as in the pinned tweet, so check it out. So I'll see you guys then, but in the meantime, let's dive into today's update. When we're looking at the fear and greed index, we want to return to this range right over here. So let's couple that with what we're looking for in Bitcoin's price. Well, naturally speaking, this range is going to be a reference point for Bitcoin's price, and it's been that way for many months. So I'm definitely going to keep watching for this range high level of the previous monthly range, because we've seen a cluster of price action right over here, and it's very possible that we might see another cluster of price action around this range high level. If we see this sort of consolidation, then that's going to be actually very good for altcoins, so that's something to watch for. At the moment, in the short term, I'd like Bitcoin to show some price strength confirmation at this range high level. But moving on, I'd like to talk about Ethereum, because this is also something that I was talking about last week, specifically Friday. Top right hand corner, if you'd like to check Friday's video out about Ethereum, because in that video I was talking about how we tend to see some turbulence at around this 260 level, because this 260 level is the mid-range of this macro weekly channel. 160 to 360 is the macro weekly channel, so the mid-range of course is 260, and in Friday's video I spoke about how breaking past 260 was easy on this occasion. It was relatively easy on this occasion as well, but over here we got a lot of turbulence. So the question was, what are we gonna get? And it looks like we are seeing a little bit of turbulence, which is less than ideal, but at the same time, we've seen this before. We've seen turbulence at these levels before Ethereum continued to 360. I still very much believe that this is the case, so we are prepared in terms of this shakeout. The only problem going forward is that, of course, this cluster of price action represents daily candles, so this is going to be a while. If history repeats itself, it doesn't have to be like that, of course. We can see this sort of messy price action for a few weeks when it comes to Ethereum. Let's hope that's not the case for Ethereum this time around. Let's hope that exuberance flees the market much quicker than this time in the past, but we have to be patient. We have to be patient and just wait for that euphoria and that over-optimism to just escape the market in the short term. So it isn't really Ethereum's day. It hasn't been Ethereum's day for a few days now, but we have to bear in mind that there are a lot of fundamental catalysts that are important for Ethereum this year, and though it isn't Ethereum's day today, or it wasn't yesterday, that doesn't mean that's not going to be Ethereum's month or even its year. And I know that I've made a Friends quote right over there, but we have to bear in mind that Ethereum has shown us that truly it is the year of Ethereum. It's had a spectacular rally towards the upside, and we have to just bear in mind that corrections are natural, but they're also healthy. They correct for over exuberance and over optimism in the market. Essentially speaking, it's correcting for greed as well as extreme emotions, and extreme emotions are usually signs of reversal, whether that's extreme fear, which precedes financial opportunity, or extreme greed, which precedes a correction in the market. In the short term, we have to bear in mind that there is a weekly close below this resistance, right? So the 260 level is a resistance. So we saw a weekly candle close. Of course, FOMO buyers are trapped in this wick right over here. So they're currently either in loss or they've stopped out in a loss for FOMOing. But the thing is, we have closed below this resistance, so we're seeing rejection right over here. So the fact that Ethereum has candle closed below the 260 level means that this is a very young rejection from this level for Ethereum. And just like we saw in the past right over here, it could get quite messy. So prepare for volatility in any case. Moving on to Ethereum BTC, you guys are quite familiar with this chart. I've been covering Ethereum BTC every now and then on the channel. And we've been speaking about how we saw exponential moves to the upside every time Ethereum BTC broke past this 200 EMA. And of course, we saw the target get reached, but at the same time, we saw Ethereum overextend itself. And this is something I was talking about in the previous video as well, that overextension for Ethereum BTC's price action is quite unnatural. So the more it does that, the more of a correction it's probably going to suffer. And it did overextend itself quite a bit, because historically we tend to see a 17 to 21, 23% breakout past the 200 daily EMA before a correction. We actually saw a 36% rally towards the upside. So that's a very strong rally, much stronger than before in the past. So it has gone against the grain of history in that respect. It has rallied around 10 to 15% more than it usually does. So we are seeing a strong correction at this time. So it very much might be the case that we're going to see a follow through and a return towards the 200 daily EMA, just like it tends to do, because in the past we've seen a 17 to 23% rally once breaking past that 200 daily exponential moving average, and then we see a correction towards the 200 daily EMA once again before rallying towards the upside. So I am going to maintain this, but for the time being, I'm not going to consider building any long positions before we see a stronger retrace after this really exuberant rally. Because at the same time, even though we FOMO wicked past this level of previous resistance, we have to actually bear in mind that we closed below this level of support, or at least resistance, because now we're seeing a rejection here. So we saw a FOMO wick, we saw extreme emotions, we saw that over exuberance take price a little bit further, but of course this was very unhealthy, very unsustainable, and that's why we're seeing quite a lot of volatility and a strong retrace to boot as well. So not touching Ethereum BTC for the next while, because at the same time, if we look at this range right over here, then we have to just consider that there is very little historical price action over here, which is going to figure as a potential form of support or demand. We just don't have any buy orders that have been historically stacked within this range, which is why we saw a strong red candle like this in the past, because there just simply is no buy support on the way down within this range. And this is actually a very good representation of that lack of buy support. Will we get a strong red candle like this? That remains to be seen. We have to bear in mind that there isn't a lot of historically transacted volume in this range, so it could be quite a strong drop. In any case, I'm just going to watch for a stronger retrace in Ethereum BTC's price action. And finally, before we wrap up, here is Litecoin BTC. This is an interesting case because we saw a lot of positive candle closes and candle behavior above this historical accumulation box, but at the moment we're actually seeing some dipping once again into this accumulation box for Litecoin. So I am wondering, because in the past we've seen wicking into this accumulation box before seeing rallies towards the upside. This has happened twice in the past before, so I'm just wondering, is this the end of wave one and we're going to see a small retrace potentially right back into this box? Because this is something we were talking about in the video on why Litecoin BTC is a coin I'm bullish on. So if you'd like to check that video, it's in the top right hand corner. In that video, I spoke about a potential wicking price action towards the 0.065 level. That's somewhere I'd potentially see Litecoin BTC retracing towards before moving to the upside once again. That's a potential scenario, because if we think about Litecoin BTC in waves, then this is wave one. This will be the beginning of wave two. So we are currently in wave two, and we have to bear in mind that we've seen this sort of wave structure in the past for Litecoin as well. So if we think about this wave right over here, wave one, wave 2, wave 3, wave 4, and wave 5. And the same happened in the next cycle, wave 1, wave 2, wave 3, wave 4, and wave 5. The over-exuberance and that exponential wave 5 to the upside. So we are most likely seeing the end of wave 1 right over here, followed by a wave 2, which is only just beginning and could see wicking all the way to that 0065 level. So that's something I'm watching. That's something I was open to in that video. So it could be the case that we see that. So I'm curious to see how Litecoin BTC will behave going forward. And having said that, that's just about it for today's video. If you enjoyed this video, please leave a like. I'm more than happy to continue providing this content for you guys as long as you find value in it. So if you do find value and enjoy it, please leave a like, of course, subscribe for future videos, and of course remember that this Thursday is the next webinar, Altcoin Hype Cycles, February 20th, this Thursday, 7 p.m. UTC. Make the most of this pre-order discount and visit the link in the description down below, or check out the pinned tweet in the comments. That's about it for today's video. I hope you enjoyed it. Thank you so much for watching. I'm Rekt Capital, and I'll speak to you soon.